All right, good afternoon and welcome to today's webinar, The Landscape for Digital Assets and Infrastructure. I'm Perry Ann Boring. I'm the founder and president of the Chamber of Digital Commerce. We are a trade association whose mission is to promote the acceptance and use of digital assets and blockchain-based technologies. We'll be turning 7 years old this July, and we have really been at the forefront of supporting innovators and pioneers who are building applications and leveraging blockchain technology through a wide variety of use cases. Today, we're going to be focusing on what's happening in the digital asset landscape, digital asset securities landscapes. One of the promises that I see for blockchain technology is this ability to tokenize assets. Really, any asset, tangible or intangible, could be tokenized or represented in a digital form and then tracked, traced, and recorded using a distributed ledger. And the benefit of this is that it will allow for transactions to be faster and cheaper and more efficient than previous infrastructure has allowed for. And these benefits, it can apply to many different asset classes, from real estate to an entire host of financial products like ETFs and ETPs and funds, as well as private assets like collectibles and arts. Throughout today's event, we're going to discuss how some of the leading pioneers are unlocking new opportunities in the private markets and using blockchain technologies and digital securities. And we'll also discuss what is the path to institutional adoption for digital securities. And to kick us off in this discussion, I'd like to introduce our co-host, John Jacobs. John is the Executive Director of the Center for Financial Markets and Policy at Georgetown University, and he's also a board member at tZERO. John, over to you.
Great, thanks, Perry Ann. Yes, this is a great program, a partnership between the Chamber, Georgetown, and tZERO. I get to wear two hats today because I've been the Executive Director of the Center for 5 years, but also last year joined the board of tZERO. The Center for Financial Markets and Policy is one of the 7 centers of excellence within the business school, the McDonough School of Business at Georgetown. And our focus is on efficacy of markets. It is focused on disruptive technologies, data, ESG, those kinds of issues. We pride ourselves on the ability to convene global events and conduct research, both primary and secondary research on those topics. So any questions you have or anything you'd like to do, let's talk about that. On the tZERO side is, given my 30+ year history at NASDAQ, which was a market built to organize and develop the OTC equity market, what I love about tZERO is that they are at the forefront of developing a market for digital assets, building liquidity in the market for digital assets, but also providing that third leg, which is helping securities or different assets tokenize or become digital. So those are like the 3 stools of building a market, and I'm delighted to be able to share and work on the strategy for that entity. So let's transition right to that tZERO presentation, that tZERO discussion with Solomon and Ashu, who I've had the pleasure of working with now for about 6 months or 7 months now. Both have extensive capital markets backgrounds. They are just really, really strong in understanding liquidity, understanding market structure, and understanding how to tie the two together. So I think we're going to learn an awful lot in this conversation. So let me go ahead and jump off and turn it over to Solomon and Ashu.
Excellent. Thank you, John. My name is Solomon Tesfaye. I'm the Vice President of Business Development and Capital Markets here at tZERO. My background is primarily investment banking, venture capital, and operations. I'm joined by my colleague, Ashu Vats, who's a Director of Business Development and Capital Markets here at tZERO, also has primarily an investment banking background. Today's content has been structured as educational material to help demystify digital securities and primarily focus on digitizing private assets to reduce friction and enhance efficiency and liquidity in the private markets. We will be taking questions at the end of this presentation, so feel free to submit those questions throughout this presentation. And with that being said, I will hand it off to Ashu to kick things off.
Thanks, John, and thanks, Solomon, and thank you everyone for joining today. So as Solomon mentioned, our goal for the next 15 minutes is to provide an overview of digital securities and how they're being leveraged within private markets. As you can see on this first slide, some of you may not have realized this. I certainly didn't until I joined tZERO, but the private markets are massive. All of the attention we see in the news is around IPOs and the public markets, but since the year 2000, there's been an exponential amount of capital being deployed within the private markets. As you can see on this page, there's 2 times more capital raised in private markets versus the public markets. Companies are staying private longer because access to capital is much easier, and the regulatory burden and cost of executing an IPO is not worth pursuing for many companies. The data clearly supports that as the number of public companies, obviously pre the current IPO SPAC boom, was down nearly 50% since 1996. Even with this tremendous influx of capital into the space, there's not been a liquidity solution for private assets. Private markets are 330 times less liquid than public markets. This has created a difficult environment for investors who are seeking exits or investors who'd like to access private assets. Our view at tZERO is that digital securities and our ATS can help address the liquidity gap within this market segment and help increase the number and type of investors within this space. We'll get back to how tZERO and digital securities are trying to solve this issue, but first, I want to talk about how exactly and what exactly is digital security. So moving to the next slide, what exactly is a digital security? And I know Perry Ann touched on this at the beginning. Many people immediately get confused about digital securities due to the word digital. It's very simple. Digital securities are traditional securities, such as equity or debt, for example, which has an added technology overlay that enhances the investor and issuer experience through customization and transparency. Moving on to the next slide. The digital asset universe is moving quickly, as we all know, and can be confusing. People have a hard time understanding the difference in these assets. I did myself when I first joined tZERO. We continue to get questions of, is this the same thing as an ICO? Are digital securities crypto? The answer is no. These are 3 very distinct asset classes, with digital securities being the most regulated and providing the most financial rights for investors. At tZERO, we work very closely with issuers by taking their cap table or private equity and creating a digital security. This digital overlay, in conjunction with trading on our platform, has numerous benefits outside of just liquidity, which I'll be going over on the next slide. So what are some of the benefits of digital securities, and why do we believe they are the right method to serve the private market? Traditional capital markets, as we all know, remain slow or very manual and archaic with limited flexibility. Digitizing a security provides issuers the ability to customize their asset to meet their needs as well as their investor needs. This means issuers can customize their securities in various ways, including things like automated compliance, limiting trading in specific jurisdictions, allowing trading for just accredited investors, or instituting investor holder limits to ensure individual investors cannot exceed a certain percentage of market cap. It also provides a level of efficiency as related to things such as investor reporting, dividend payment, and even settlement, which is currently same day on our platform. And one of the most important attributes is that digital securities provide through our ATS is access to private markets. Retail and global investors now have the ability to participate in this space, which has historically been a challenge. Moving on to the next slide. So this slide gives a clear comparison of how digital securities can elevate private markets for both issuers and investors. Issuers, on one hand, benefit from the automation, the control, and the visibility into investor data, in addition to gaining a potential premium on their valuation, given that there is some form of liquidity. Investors, on the other hand, benefit from access to liquidity in a frictionless manner. What does this actually mean in terms of tZERO? Investors can trade their digital securities on our ATS just as easily as they can trade Apple or Amazon stocks. In addition, the cost of being able to trade on the platform for investors is much more affordable versus other ways of trading private securities. So moving on to the next slide. We're excited about the progress of this very young ecosystem, and we really believe we are tackling the liquidity gap issue for private assets. As you can see from this slide, growth within the digital security space has been astounding. Given all of the benefits behind digital securities, we've seen a significant increase in their utilization. The market has expanded tremendously. not only due to the creation of more assets, but actually the appreciation of them as well. More and more issuers within the private markets are looking to digital securities as a method to attract more investors and provide a form of liquidity. As you can see on this slide, between 2019 and 2020 alone, the market cap for digital securities increased from almost 60 million in 2019 to a little under 370 million in 2020. And the total dollar amount actually being traded across trading platforms has gone up 12 times over the same period. This clearly highlights the quick adoption and the significant trajectory of this space. And we're very excited at tZERO to be a driving force behind this. I'm going to hand it over to Solomon now, who's going to dig into this a little bit deeper and go over a recent case study.
Excellent. Thank you, Ashu. So as Ashu touched upon, there's a number of advantages to digitizing private securities. But just to elaborate on the advantages of private asset liquidity, there are several benefits to the issuer or current asset management team. An asset can remain private while still providing ongoing liquidity optionality to investors if trading on the secondary trading platform such as tZERO. Offering liquidity can reduce their cost of capital and, as Ashu mentioned, can potentially capture a liquidity premium. Additionally, digital securities automates compliance and governance. For example, at a base level, digital securities enforces regulatory compliance, but you can also provide tailored liquidity. For example, if you do not want one investor to accumulate over 10% of your equity float once trading on a secondary platform such as an ATS, or if you don't want certain geographies to be able to participate in the trading of your particular asset. These are all things that can easily be coded into the digital security so that it's mistake-proofed, that transaction simply just can't happen. For current investors, it provides frictionless transfer of private securities and provides a broader set of investors with access. So efficient private market liquidity means employees, minority shareholders, and other stakeholders can now sell at a fair value rather than at a discount. Moving on to the next slide. The benefits of digital securities are not restricted to any specific asset class or geography. Real estate and other tangible assets within industrials, energy, etc., reflect some of the largest early issuers pursuing this. At tZERO, we are working with a wide range of issuers ranging from large real estate developers, operating companies within tech and consumer, asset managers seeking to have their funds trade, or a variety of assets within their portfolio that they wish to have trade individually. We refer to those as serial issuers. One great aspect of digital securities is that you can facilitate fragmented ownership. So if the initial capital raise may have had a $100,000 equity minimum, you can have the shares worth $1 per digital security or share once it's trading on the secondary market platform. Therefore, giving broader access and really democratizing access to some of these more elusive, illiquid assets. Moving to the next slide. So tZERO is the leading provider of secondary liquidity. We have the ability to digitize, or often referred to as tokenize, an asset and enable it to continuously trade on our SEC FINRA regulated alternative trading system that in 2020 had over 95% of the global security liquidity on the platform. We're always seeking to onboard attractive assets globally, and we're always seeking to collaborate with peers across the ecosystem. Moving to the next slide. So I'd like to provide you with a brief summary of the most recent asset we onboarded onto the tZERO ATS, the St. Regis Aspen Resort, the ticker's ASPD. It's a luxury 179-room resort in Aspen, Colorado. The innovative management team at Elevated Returns, the owners of the St. Regis Aspen Resort, wanted to provide investors in their most recent capital raise with liquidity optionality in this trophy asset. Moving to the next slide. This slide basically provides a chronological order of what their process looked like. At the end of 2018, they did an 18 million private capital raise through a private placement Reg D 506C. In July 2020, they engaged with tZERO to have their equity in that particular private placement digitized. The securities were seasoned and freely tradable. And then we digitized them or tokenized them on the Tezos blockchain post initial due diligence of the asset. And then it began trading about 4 to 5 weeks afterward amongst both accredited and retail investors. This was a great example for the broader ecosystem of really democratizing access to what's considered a trophy asset And now hundreds of investors now have access to equity within this particular asset. With that being said, I'd like to hand it off to Alex Soropoulos, who's the head of communications at tZERO, to field questions.
Thank you, Solomon and Ashu, for kicking off today's event with a discussion on enabling private market liquidity through digital securities. As Solomon mentioned, the Q&A session is now open. Feel free to submit your questions through the platform's questions widget. I'd like to kick off the discussion with our first question. Solomon, maybe you should take this one. Are all of the issuers you are in conversation with conducting a capital raise ahead of trading on the tZERO platform?
So the simple answer to that is no. We really put issuers into two buckets. Historically, there was a large focus on issuers that are doing capital raises ahead of onboarding onto tZERO or any other secondary trading platform. And that put us at the mercy of those capital raises and their timing and then the potentially applicable lockup periods associated with those. So we still have a significant number of issuers that we are working with in that respect. But then the lesser known relationship that we have with issuers, and I think this is really going to be exciting for a lot of issuers that are less aware of this, is direct trading, where there's no capital raise being done. The last capital raise was done potentially over a year ago, and they're simply trying to give investors liquidity optionality. And so then we're able to just simply digitize their existing ownership structure and onboard that onto the platform post due diligence. And that's a much faster process. That's a 4 to 5 week process from engagement to trading. But this is something that we expect to see quite a bit of. And we are talking to a large number of issuers that are seeking to provide their existing investors with that liquidity optionality.
Thanks, Solomon. We have another question about a very hot topic right now, NFTs or non-fungible tokens. What are your thoughts on NFTs? Ashu, maybe you take this one.
Yeah, absolutely. And agree, NFTs are definitely the talk of the town as you think about the digital space. And I'd say from a tZERO perspective, we're very excited about NFTs and we see a huge opportunity. I actually believe our CEO, Sam, has spoken publicly about this relatively recently as well. I'd say, we're working through this very carefully. As everyone knows, we pride ourselves on operating in this ecosystem the right way. So we're working with our technology and legal teams to make sure we approach the market the right way. And I think, it's definitely, people should understand we're focused on this space and folks should expect to hear more from us on it.
Thanks, Ashu. We have time for one more question. This participant notes that there has been a flurry of partnership announcements from tZERO at the start of this year. What is the nature of these partnerships and what type of partners are you seeking to continue to grow the ecosystem? Solomon, let's kick off with you.
Absolutely. So similar to the dynamics that you see it with NASDAQ and investment banks, or NYSE with investment banks, where basically they're on-ramps to their exchange, we're creating the same web of on-ramps, if you will, with issuance portals, investment banks, law firms, and other players within the ecosystem, whether they're cap table management providers or transfer agents, to really serve as on-ramps onto the tZERO trading ecosystem. And this is, we really believe in just this collaboration across the board. We think it's mutually beneficial for all parties involved. And so really these partnerships are referral partnerships where either they are digitizing the asset themselves and then we're simply onboarding onto our platform, or they're investment banks that may be leading a capital raise and then they want that particular tranche of equity or the full equity stack to trade on the tZERO platform. But these are all referral agreements in some shape or form to just further collaboration within the ecosystem.
Thank you both. There are a few questions we are not able to get to. If you have any questions for our presenters or would like to learn more about tZERO, please feel free to reach out to inquiries@tzero.com. I'd now like to turn it over to Perry Ann for the second portion of today's event.
Thanks, Alexandria. And thank you, Solomon and Ashu, for the intro on digital securities and what you're building at tZERO. And appreciate all the questions as well. You can keep them coming. We'll try to get to them throughout the event as we can as well. Our next panel is about the path towards institutional adoption. So Blockchain technology is still a relatively young technology. The first blockchain, Bitcoin, was introduced in 2009. So we're about 10 years, just over a decade into the saga. And meaningful things take time to build. And a big part of that is ensuring we have all the key parts of the infrastructure in place, from technology to regulatory to everything in between. I'm pleased to introduce our next moderator. Her name is Anne-Marie Turney. Anne-Marie is the founder of Liquid Advisors, and she's also a senior strategic advisor to the Chamber of Digital Commerce. Anne-Marie, thanks for joining us today.
I'm so happy to be here, and I think that the last panel did a great job of sort of setting us up for our panel. So if I can have Alan and John and Gerald join me. There we go. Hi, everybody. So I'm just going to introduce the panel. So Alan Konevsky is the Chief Legal Officer at tZERO. Before he joined tZERO in 2018, he held a range of positions focusing on financial services and other highly regulated industries, technology, payments, capital markets, and strategic investments, including at MasterCard, Goldman Sachs, and Sullivan & Cromwell. Gerald David is the president of Arca Labs and Arca Capital Management. In that role, he leads the development of SEC-registered digital securities products for investors and enterprises. He has been working in the digital asset space since 2015. And for more than 17 years, he's also served as a corporate director and member of the management teams of a range of Fortune 500 startup exchanges, including CME, MEX, GreenX, and the Dubai Mercantile Exchange. John already had a slight introductions, but in addition to serving in his role at Georgetown University, he's also a New York and DC based senior business leader and the former executive vice president and chief marketing officer of NASDAQ, another place I used to work as well. We overlapped there a bit. And he also serves as the chairman of a range of boards other than tZERO, including Illyrian. He's the founder and CEO of Q3 Advisors LLC and is a board member of Procure Funds and US Bank Lift Board. So with that being said, Alan, I think, Solomon Ashu did a great job giving a lot of interesting data and trends about what you're seeing at tZERO in the digital security space. But maybe you could kick us off talking about how close you think we're getting to the inflection point for widespread utilization of digital infrastructure as a medium for moving anything of value.
Anne-Marie, thank you, and delighted to be on today and to chat with you guys. Perry Ann did a wonderful job in the beginning outlining the benefits of blockchain technology and digital infrastructure generally for a wide range of use cases, including capital markets. I think the inflection point for the recognition of the utility of digital infrastructure, including blockchain, is here. We've seen it in connection with the growing recognition and acceptance of Bitcoin and other cryptocurrencies as an asset class worthy of institutional focus. We've seen this in regulatory developments, including at the OCC with respect to the ability of banks to custody cryptocurrencies, as well as use them for settlement and payments reasons. We've seen this in connection with the focus on central bank digital currencies that's coming up in a number of places, including the US, including China, including Japan. We've seen this in connection with capital markets, where we've been leading the push for the recognition of the power of digital infrastructure as a far superior method for moving anything of value, including securities. And we've seen some very positive moves from the Securities and Exchange Commission towards the end of last year that are finally unblocking the path to broker-dealers custodying full blockchain securities. So I think we've hit the inflection point, including from an institutional perspective. The path towards payments, capital markets, and other use cases is clear. Now, that's not to say that some products will have a tougher time than others, or that we won't continue to be making a very clear case for continued reform that's needed, but I think the inflection point is here.
Great. Gerald, you want to highlight what Arca is doing in the digital security space or the digital asset space as a general matter? Because you're doing some really interesting things.
Absolutely, Emery, and thanks a ton for having us here today. Thanks to tZERO, thanks to the Chamber. We're really excited to talk a little bit today about what we're all doing here in the institutional space and how we're trying to pave the way for more adoption with reference to digital securities. Arca has been involved in the digital security space dating back to 2018. We had an idea back then that we could create an instrument that potentially could be appealing to the institutional marketplace. We had a couple of theses back then. One was that interest-bearing instruments were going to be critically more important. The second was that low volatility instruments as well would play an increasingly important role in the marketplace, and that regulation was coming. And again, that was down in 2018. And our thought pattern, at least on all of those, has proven true. And once we understood that thesis, we understood that we could play a part in impacting the way that the market developed. So we started thinking about how we could do that, and we came up with an idea that if we could take a 40 Act product, something that's very, very well known to most market participants in the institutional space, and we could blend that with a digital asset or with blockchain technology, that we could really do something that was very, very revolutionary. And we approached the SEC, began that conversation, and began to explain to them why we thought that creating a blockchain-based 40 Act product that had a digital asset as an output could be really, really powerful and important. And a couple of those benefits obviously are things like peer-to-peer transactions. And then ultimately, obviously, if you were able to create that structure, you could then replicate that structure in a way. So we set forth to create a closed-end interval fund. We decided to use US Treasuries, which would then, in a positive rate environment, contribute to an interest-bearing instrument, and also at the same time being a low volatility token as well. We spent about 2.5 years working with the Commission, trying to satisfy all of their requirements, and ultimately were granted our effectiveness on July the 6th of 2019. 2020 was last year. So since then, we've been working really hard with institutional market participants, banks, financial players, institutions involved in the insurance space, and others, trying to evangelize digital securities, blockchain technology, and how it could play an important role based upon what Perianne was saying in her preamble of this event, to really bring in more market participants and advance the ability for the financial system as we move forward.
So I'm interested to know sort of what your experience was like with the SEC during that period, because I know that Alan touched upon the fact that the SEC is providing really helpful and necessary guidance right now to the markets about how broker-dealers can operate in a more traditional role around digital securities. But we also know that the SEC to date still has been not willing to allow some other crypto type products enter the US market. So what was your experience like? And are you willing to share kind of some of the major issues that were raised during your registration process?
Absolutely, Emery. So similarly to Alan and his experience at tZERO, we found the Commission to be incredibly helpful, incredibly understanding of the potential for the future with blockchain technology, yet at the same time trying to ensure that they're doing their job, which is to protect investors, small, big, or otherwise. And I think that the SEC unfortunately gets a little bit of a bad rap on this right here, right? Folks in the marketplace, journalists and others, take a look at one structure, perhaps an ETF, and continuously are questioning why the SEC isn't making progress. And that couldn't be further from the truth. We believe that the SEC has been an incredible partner for us. We've really found that process to be incredibly productive, and the output of that has been the Arca US Treasury Fund. And the Arca US Treasury Fund, as I said before, is the first 40 Act fund that issues its shares as digital securities. And we recognize that fund structure may not be 100% right just yet, but we continue to work with the Commission and finding ways that we could create a product that is suitable and for advancing the goals that we all here share on this call right now, which is bringing in more market participants, making them understand the technology and feel more comfortable with utilizing blockchain-based solutions.
I'm going to come back to the Treasury Fund in a second, but John, I've heard you say that markets develop over time. What's your take on the status of the evolution of the digital asset market, in particular digital securities?
So it's early days, but very exciting, and I think not too early. And to echo Alan, I think we are at that inflection point. If you study markets, which is one of the things that we look at obviously at Georgetown, Markets evolve over time in different ways, whether it's a financial market like NASDAQ or the CME or options markets, looking at their structure, look at the New York Stock Exchange, et cetera, over time, what they look like today is not what they look like when they started or even 5 years ago or 10 years ago. The other markets, whether it's eBay or Amazon or Groupon, those are markets as well. And again, those are all technology-enabled markets today, right? So one thing is just to note that I think is something to follow up on what Gerald just said was, I do think the SEC gets a bad rap because throughout history, technology always moves faster than policy. It has to, right? We had cars before we had driver's licenses and stop signs, right? You name the technology and it's out there moving forward. So we have had DLT technology, as Perry pointed out, for 11 years now, but it's hard to understand and push the regulation forward. So I think, as Alan pointed out, the focus has been on the markets side, right? And they're very fast on that, but they're having a little bit of a challenge on the actual digital asset side because, as Gerald pointed out, they got to focus on investor protection. So it's happening. It's going to continue to happen. It's going to continue to accelerate. But so I think it's early days, but I think we are on track for just an explosion of looking at assets being tokenized and digitized and then put on liquid secondary markets. And I think we're just, I think in a year and 2 years and 3 years, we come back and do this meeting again, it's going to be just amazing to see the growth.
I believe that as well. It's exciting to hear. Alan, let's go back to you. What have you seen as the most prevalent use cases for issuers looking to provide a digital representation of a security?
Yeah, I think,
Ashley showed a couple of slides on that, but I'd love to know kind of your experience.
Yeah, no, absolutely, Anne-Marie, thank you. And, I'll go back to the wonderful presentation that my colleagues Solomon and Ashu did. And we can really think about the use cases in a couple of categories. One is that there are wonderful forward-leaning issuers like Arca and JD who are looking to couple their capital raising needs with the realization that of the potential that this technology brings to them as issuers and their investors, whether it's transparency, whether it's enhanced liquidity, or other aspects. And that's a very important talent pool for us. The second category are folks who have already raised capital, and you can use your corner case as a late-stage private tech company, although it could be a number of projects, including real estate projects that Solomon and Ashu talked about. And those companies are sitting on a relatively mature cap table, and they're looking to do two things. They're looking to provide liquidity to their existing investors in a way that's compliant with federal and other securities laws, but doesn't require them to become a public company. And they're looking to do that in a way that's continuous, automated, transparent, allows for fulsome price discovery, and utilizes the benefits of digital technology in doing that. So it's really those two categories. And I think in terms of other, what kind of a company does it have to be? It's like asking for any new, well, a lot of new technologies, electric cars, right? Well, who can drive an electric car, right? The answer is anyone. And it's the focus is really identifying on what your objectives are and what product features you're looking to deliver to yourself as an issuer and to your investors. And it's a very, very exciting time.
I'd love to follow up on that if it's okay. So Alan did a great job of describing, for example, just pick a company or an organization that has assets and managing their own cap table now, and they're all the requirements they have and all the compliance issues. But let's talk about practicality. Right now, if you haven't digitized it, if you don't have a regulated compliant secondary market, you're responsible for that. So the last thing you want to do as management is take your eye off the ball of what you're doing day to day, building your organization, whether it's treasury funds or whether it's real estate or things like that, to become your own market maker, where you've got to seek out, one of your current investors or original investors comes to you, says, I want out, and somebody else wants in, and then you got to vet them and you got to do the transaction, things like that. Who wants to be their own market maker? There are market makers, liquidity providers. Those people do that really, really well. And they do it best on a market that is in full compliance and does all that. So the idea that we can not just facilitate that, make it better, but to make it faster, more transparent, easier, and lets the senior management of the company focus on their business plan, which is what they should be doing, and allows the markets and the market participants to focus on what they do. Those specializations work. If you look at all the established markets, the more and more that we do that, the better everyone is.
Yeah, John is absolutely right. A continuous automated marketplace that has liquidity providers and brings together buyers and sellers using matching technology that allows for trades to happen in a compliant and dynamic and efficient way without taking up company bandwidth is really important. And it's a really important observation, John. Thank you for making it.
Joe, do you want to jump in with kind of your experience with secondary trading and whether it's a draw for investors to come into the fund knowing that they can get kind of real-time secondary trading? And then I'm going to talk a little bit about, where I see the benefits of the digital market compared to the existing framework for resales of private company stocks. So maybe you can give us your experience first, and then we can dig into why digitization creates so much more efficiency in more detail.
Absolutely. So the Arca U.S. Treasury Fund, which I mentioned before, subscribers to the fund now are permissible to transact peer-to-peer. One of the aspirations we have for the fund on a forward-looking basis is to offer more liquidity. And one of the ways that we would love to do that is by having our coin ultimately in the fund, ultimately listed on an ATS, not a vehicle. One of the main reasons, as we all heard from Ashu, is that kind of these ATS, at tZERO specifically, has seen a 12% or 12x increase in volumes traded over this last period, right? What better way to go ahead and get an asset like ours out there to a broader audience than having listed on a distribution vehicle that is appealing to folks that want to engage in this kind of trading activity. So from our standpoint right now, we look at the global landscape, of trading, and we start taking a look at things and understanding what market size really is. And I think the consensus of this panel is that we're just getting going, right? The car analogy, which we just heard a second ago, I would add to that by saying that we're building the car, we're also building the road as well at the same time, as well as putting the laws in for speeding. So sometimes it's quite complicated and it's very difficult for us to weave all these different elements together. But we can't wait for the opportunity to offer our top token up to that audience. And we hope to be a part of the story moving forward with reference to increasing volumes and offering out our token, our coin, to that audience.
Is your plan for that liquidity option contingent upon the shares being outstanding for 12 months, or is there another kind of waiting period before you wanted to provide that kind of liquidity?
Yeah, there isn't a waiting period for us right now. The terms of our prospectus and what we engaged with the SEC on was simply being permissible for peer-to-peer transactions right now. And we think that's a really great way for individuals who have not had exposure yet to digital securities to actually become comfortable and understand the transferability of those assets. It all is part of the same story, right? Because ultimately what we're talking about here, if you listen to this conversation, we're talking about creating an environment whereby an asset can be traded from me to Alan, and then Alan could trade it on tZERO, and then ultimately could be bought by John and then sent to you, Emery, peer-to-peer. So this is all very interlinked, which is a great step for this marketplace, because what we're talking about here really is fungibility. The benefits, obviously, for an ATS simply is that price discovery and being able to access a greater market simply because of the number of market participants that are congregating in one venue. So all of that is super appealing for us.
Yeah, I think, John, you talked earlier about how management, has better things to do than try to focus on providing liquidity. And my own experience operating the private company markets is with more traditional participants like NASDAQ private market and maybe the CARs and the equities ends. Is one of the questions that someone's asked relates to that. In that universe, issuers tend not to provide real time liquidity because of a lot of concerns they have around employee distraction and pricing and things like that. But maybe we could talk a little bit about the real benefits that digitization adds to providing liquidity for unregistered securities. And Alan, I know in my experience as a GC of an ATS BD in this, one of the things that we thought was incredibly helpful is that an issuer can actually set all kinds of parameters around trading. Has that been your experience with issuers? Like they're willing to provide liquidity as long as they can, approve who can sell, who can buy, and sort of when and how much? Like what are you seeing around the interest of issuers in the space to provide more negotiated discovered pricing?
Yeah, absolutely. This is really a situation where an issuer has the benefit of continuous automated trading that we've discussed, as well as an ability to set parameters around the types of investors who might be on either side of the transaction, whether it's looking at their status as an accredited investor or a QP if you're a fund, or some other types of parameters, whether it's looking to limit it to employees only, or which could be important for a number of private companies. So the answer is yes, and there's a wonderful kind of bespoke conversation that you can have with the management that allows you to set up an automated trading environment that meets the parameters that, for example, I want people to trade, but I wanted to trade only among folks who've been verified as my employees. And I think the process of bringing account holders on board and getting them verified, including from that perspective, as well as the process of then only having trades from the approved types of accounts go on to the ATS and match and be executed. Once that clock is wound up, to John's point, management can put the clock on the shelf and it'll run, and it'll run in the way that it's been built without distraction.
I see that as a huge positive for issuers. John, what do you see as, we've talked a little bit about the main benefits of digital securities, but what do you see as the main challenges to widespread adoption? And I'd love to couple that with JD, you kind of talking about your experience with institutional buy-in for your product.
So I think the main challenge is that it's still new, right? You say blockchain to a lot of people and their eyes, or Bitcoin or things like that. There's a lot of people get these things very conflated. Perry and I actually have taught a fintech blockchain class at Georgetown, the very first one. And we have a slide we use that shows concentric circles of Bitcoin, and it is in a bigger circle of crypto, and a bigger circle of DLT, and a bigger circle of fintech. Right. So understanding that, but if you say blockchain, Bitcoin, sometimes people get confused. And so you've got a wide audience out there. I look at this as another analogy I use is, my dad is 91 years old. He needs to go physically to the bank. So I need to take him to the bank, and he needs to say hello to everybody, and they need to say hello to him. He's wearing his hat, and Colonel Jacobs, all that stuff. That's his intersection with the bank. I'm 62. I go to the bank rarely. Once in a while, I have to get something notarized or something else, but otherwise, I'm all online by the phone, etc. My kids think this is a bank, right? They don't even know where the bank is located because they do everything with Venmo or Zelle or direct deposit and things like that. They couldn't tell you where the bank is. So you have a variety of different people out there and different organizations out there who are different places in the ecosystem, right? So they're different points of development. So I do think it's going to happen. It just will happen. It's happening today. We see the rapid development of adoption because the benefits so outweigh the downside. And the number one benefit we talk about liquidity, or we talk about taking management's eye off the ball. Or we don't. Also we're talking about is taking risk, de-risking the system, de-risking the process for people. And the more you de-risk it, the more certainty you bring back into the system, and the more certainty you bring back in, the more you increase liquidity. So anyway, so the challenges are very clearly, it's just a matter of time. It will pick up momentum. NASDAQ started in 1971. It hit its first million share day in 1983 or 84. Today it's doing 5.7 billion shares a day. Didn't happen overnight, but will happen a lot faster here than it did in, say, the OTC equity marketplace. So.
Great.
Can I jump in, Anne-Marie, just and John, absolutely agree with you. I'll just maybe make two other kind of ancillary observations. One is the conversation has to continue to shift away from discussions about technology and kind of the guts of what we're trying to do. Because most people, most consumers, and I use that broadly speaking to talk about issuers and investors and financial firms and regulators, care less about the means and they care about the benefits. And so the conversation has to shift around the benefits of digital infrastructure, whether in the security space, whether in the money space and payments, whether in other objects of value space, so NFTs. And to the point that John made about speed, reduced friction, transparency, reduced cost. And it's that kind of a conversation that needs to happen a lot more, as opposed to using kind of tech buzzwords that at the end of the day, a consumer doesn't and shouldn't, past a certain point, care too much about. And so that's what's really important now, both from a retail perspective and institutional perspective and regulatory perspective. And I think the second point is, and I think that they're related, is this technology is really built for things like that. When you look at digital technology, blockchain technology, for moving items of value represented by data, right? At the end of the day, what's happening now is people say, well, you have electronic banking. Well, you have electronic banking running on legacy systems that weren't necessarily designed to do what they're being asked to do, which is to move value, authenticate a user, identify a user, settle a transaction. And so you're kind of putting together a pastiche of legacy systems, some not purpose-built for what they're being asked to do at all. Like your mobile phone was not designed to be a driver's license. It was not designed to identify and authenticate anyone. And so these things are really being combined to create an ecosystem that is far inferior to a technology that was purpose-built for what we're asking it to do. The same thing that technology did with data and voice is going to do with value.
Yeah, and Alan, to add on that point to what both of you are saying as well, and John, to your point of education, I would take that one step further and say that there's a divide between technology, but there's also a divide between digital assets, right? Cryptocurrency assets in general, right? There's a huge question mark that people have, and they don't really fully understand yet because we're new, right? The differences between what a digital asset is and, let's say, Bitcoin. And we find that out every single day, because what we're getting right now is a tremendous amount of inbound by folks that are trying to understand the marketplace because of the flurry of activity under the guise of treasury management that's happened recently, whereby corporate treasurers are buying Bitcoin because it's a treasury management tool. And then the inbound is from all these different corporate treasurers saying, I don't get it. I don't understand how one of the most volatile instruments known to man could be used as a tool for treasury management. And it's when you start having these conversations with folks and start explaining the benefits of, regulated instruments versus, this patchwork of quasi-regulated states, New York DFS, other instruments that are out there, and take it one step further into unregulated unregulated assets as well. And it becomes an education game for us. And, it's the original question that was asked, why do we get involved in this space? It's because what we're all doing right now is the future. And it's the future that's going to bring institutions into this marketplace.
And to follow up and to go back to your very first question, Anne-Marie, are we at an inflection point, right? So here's the thing. I would posit that 99 out of 100 people in the country do not understand how the stock market works, really understand how the stock market works today. But it's used every day. There's confidence in it that it works, right? There's issues like GameStop and a few things like that. But overall, we're doing billions and trillions of value are transferring seamlessly every single day in our financial system, right? Alan, to your point, I don't know that people know how money gets from bank A to bank B, right? Is it SWIFT, ACH, is it old systems, is it a direct payment system, et cetera? I used to ask people, tell me what the S&P 500 is. And I can't get people who are index investors to really understand what the S&P 500 is, right? So I'm not saying that because I think that's a negative. What I'm saying is there's enough confidence in the underlying technology in the system that everyone's like, okay, that works. I just need to focus on my participation. I want to buy this or I want to sell this. And I think, Jared, your point is so accurate that we need to separate this. This should not be about the technology It should be about the market efficiency, the market effectiveness, providing the a much less risky, much more transparent market for investors and issuers of assets. So.
Yeah, that's absolutely right. I think that the next phase, kind of once we get past the inflection point that we're at, is going to have to be about really focusing a number of stakeholders on simple benefits that we all can articulate. But I think it's focusing on benefits rather than the guts is going to be critical. And JD, what you said about crypto is absolutely spot on. Bitcoin has created a bit of a paradox here, because on the one hand, it obviously elevated the conversation about blockchain and digital payments rails, store value, volatile with kind of a footnote about price volatility that you talked about. On the other hand, it made everyone think, when you talk about digital anything, people think about Bitcoin and crypto, with all the, the well-placed and misplaced concerns and suspicions about anonymity and compliance risk and bearer instruments. And so part of the education, including with regulators, is to kind of fight that paradox.
Yeah, exactly. And Bitcoin, I'm sorry, Emery. Bitcoin has such a bad history with the dark web and all those things that Alan, you're exactly right. It's the best because it got us here, it started everything, but at the same time, it comes with so much baggage. I'm sorry, Emery, go.
No, I was going to say, I think that people who are in the market the way all of you are, and I've spent a lot of time with regulators to help them understand, like when we talk about digital securities, it has nothing to do with crypto or other digital assets, right? It's literally just a different way of representing share ownership. Where maybe it used to be certificated, and then most issuers moved to what was, book entry, where you just have, your name in the cap table of company, and now it's blockchain represented. So there's nothing, in my opinion, particularly more risky about a blockchain representation of a share than there is book entry. And one of the beauties of blockchain and what tZERO is doing and building in what we're all focused on here is, I think blockchain actually makes markets much more efficient, much more transparent, cuts down costs, we've talked about, cuts down time of settlement, and really allows regulators a much clearer view of what's happening in the market through their ability to audit the blockchain that's used for securities transactions than they have right now in the private company space, in the private security space. And so I think it's actually just a generations ahead from a regulatory point of view. It should give them more comfort rather than less comfort, in my opinion.
Yeah, I think that's exactly right. I think relying on layers of regulated intermediaries with separate books and records maintained on legacy systems and managed and operated by regulated individuals versus, and so layers kind of separation versus, as a regulator, having access to a primary source at a snap with a number of forensic tools. And SEC put out a wonderful request for kind of a proposal for someone to build a forensic tool that they can use with on-chain assets. And the promise there is fantastic, and it's focusing on these kinds of benefits as opposed to the guts of the kind of the machine that's going to be critical.
So Alan, once we get this education under control, then we can start talking about using blockchain technology to do some real powerful stuff. We'll do things like, get the transfer agent, and we'll start really kind of figuring out what the power of blockchain is, right?
Oh, I'm telling you, the transfer agent is such a, look, this is one of my, I've been in this business a long time, but I came in right after it went from T+5 to T+3. And I saw, I was explained to me as a, young person in the markets, the amount of liquidity that poured into the markets because of the certainty, right? You had 2 more days now because you got certainty of execution. The stock was delivered, the cash was delivered, and then we saw the same thing when it went from T+3 to T+2. It's going, the incumbents aren't going to lead the way to T+0, pardon the pun. tZERO is going to lead the way to tZERO, right? Arca is going to lead the way to tZERO. So the point is, but that is not just because we can do it. You do it because you're taking the risk out of the system. You're adding certainty. You're building liquidity. That's what it's all about. So I know we get a little fired up about this. But
I'm going to say, I think incredibly hysterically funny to me that we're all like super excited about transfer agents because they've been kind of like the ugly stepchild of the settlement process for so many years. I bet they're pretty excited that we're all excited about them. But we only have a couple more minutes. I think we've touched on at least some of the questions I've seen in the chat box. We've talked about the Arca coin. We've talked about tZERO. So one question is, if anyone has any other questions in our last couple of minutes, we're happy to take more questions in the chat room. One of the questions, I think, Alan, was, what's the moat that tZERO has around its competitors that may actually try to add digital securities to their existing legacy exchange? Or do you think that, maybe I'll put it another way, we have public exchanges like NASDAQ, we have crypto exchanges like a Coinbase, and then tZERO. They're all completely different animals in my view, but why don't we talk a little bit about, in the last minute or so, kind of the moat that tZERO is built around the business that you're doing and the issues that you're working with, if there in fact is a moat. I think there is.
Yeah, and look, I'll try to be brief to the extent that I'm capable of that. So, look, the end story here is holistic, cross-asset, seamless, global chain trading and exchange of value. And so this balkanized world, well, here there are stocks, and here there's a different kind of a stock, and here there's a bond, and here there's money, and here there's another asset. And by the way, you can only do it in this kind of a sandbox, and using a highly intermediated, balkanized world. That's going to go away. And so the end vision we're looking at is holistic, cross-asset, cross-geography, real-time trading and exchange of items of value, including securities. Now, how are we going to get there? To John's point, it's a walk. It's not a sprint. And it's probably a walk and a stop, a walk and a stop, and a walk and a stop. And some of the steps are going to be first focused on merging user experience, as opposed to actually merging legal entities like a broker dealer touching cryptocurrencies, heaven forbid. But and so in the beginning, it's going to be merging user experience. But it's good, and then I'll move on from there.
All right. Oh, well, I thank all of you so much for what I think was a really fun conversation for me. And Perry Ann, we'll turn it back to you. Thanks, everybody.
Thanks so much, Anne Marie. Just quickly in closing, wanted to just share an overview of some ways in which you can continue to be involved in these discussions with the Chamber and with our members. As you may know, the Chamber runs a working group called the Token Alliance, and this group is actively educating regulators and policymakers to help promote for a predictable legal environment for those engaging with digital tokens, everything from utility tokens to security tokens. This group is co-chaired by Paul Atkins, who's a former SEC commissioner, and Jim Newsom, who's the former chairman of the CFTC. So some specific projects that the Token Alliance is working on right now is including custody of digital asset securities with the SEC, blockchain as a source of truth for record-keeping purposes, guidelines around proof of reserves. We're also working on a safe harbor for digital assets and legislative solutions to bring regulatory clarity on tokens on Capitol Hill. And as Anne Marie alluded to, we're in the process of preparing a comment letter to the SEC on their statement concerning the custody of digital securities by special purpose broker dealers. So if any of these topics are of interest to you, we encourage you to join us in the Token Alliance. If you're already a member, you can contact our member services team to make sure you're signed up. If you're not a member, you can email us at info@digitalchamber.org digitalchamber.org, or just go to our website, digitalchamber.org, click on the Join Us tab at the top, and we'll get you signed up today. I'd also like to thank our co-host of today's event, Georgetown University's Center for Financial Markets and Policy, as well as tZERO. And again, if you're interested in following up with tZERO with further discussions, you can reach out to them at inquiries@tzero.com. Thanks so much for joining us. We look forward to seeing you at the next one. Bye.